great evening to all our viewers of Movers and Shakers on this Friday evening. My name is Raj Arya, and today we have a very fascinating topic. That's right, as the name suggests, we're going to be talking to two gentlemen who are also literally movers and shakers. That's right, they are from the property development industry, and to introduce them, they are none other than Dr. Chua Eng Poo and Dr. Seth Yap, both directors from M101 Sdn Bhd. Thank you very much for being on our show this evening.
Thank you.
That's right. Now, before we talk about the topic in question, I'm sure some of our viewers will be keen to find out a bit about your personal background and how you got into this industry. Dr. Seth, why don't you start the ball rolling for this evening?
Okay, thank you. So basically for myself, I actually started off as a lawyer. So it's very natural. A lawyer, you become a developer. So before I really engaged into developer, actually I practiced more on convincing. So as I could see the opportunity comes, I just jump at the opportunities. I think especially before 2012, the market is really booming.
That's right.
Yeah, and I landed myself back then, as we discuss more later, back then I was doing more on residential.
That's right.
So I think after a while, when the two of them met, then we decided to embark on this particular brand and onto the KLCC city center area with M101.
That's right.
That's for me, it's a pretty straightforward
transition.
Yes, yes, yes.
That's right. And speaking about the two of you coming together, can you share with us also how did you both meet each other?
I think we met through a friend. Yes, yes. And that time we were actually, both of us was toying with the idea, should we just change our strategy instead of just building residential? Then when we sat down, we have these new ideas of how we could actually, with our limited resources, but we go into city center and with our unique strategies to create blue ocean, sort of like a blue ocean strategy, whereby we can still acquire 10 projects in city center, but at the same time, we don't need as much capital outlay as the big boys. So that's where we are now on our third phase, which is our third block in this year. Yeah, after our 2 years.
All right, well, hold that thought, because I think our viewers and myself are quite curious to find out how you're doing that. As we all know, property development requires large sums of financing as well. Yes. But before we touch on that, Dr. Chua, how about yourself? How do you end up in this industry?
Well, my degree was in civil engineering. So I studied engineering degree, and then my background is engineer. So I graduated, I practiced as an engineer. I pick up design, consultancy, construction, as well as development. That's why I came into development. And the reason what sparked me to go into development, because I realized development, this business is totally different from other industry. For example, the automotive industry, you have to pay 100% to build a car. From A to Z, build a car, then only can sell it. Whereas developer or property development in Malaysia, I build houses, I sell as I build. That means I can collect money from you while my construction is still ongoing. So my initial outlay will be very minimum as opposed to other industry. For instance, you build any gadget or watch, you build 100%, pay 100%, then only can start selling. Right. Here, property different. So long my location is good, I can start selling, and then I can collect money booking. I can collect the progressive payment as the construction goes by.
Right. And the interesting thing is, this is also quite unique to, I think, Malaysia and perhaps Taiwan, because in the other parts of the world, it's like almost like a traditional product where you have to build first, then sell, as opposed to how it's done in Malaysia, right?
That's right. I venture into property development because this is a very unique business in Malaysia.
That's right. You have something to add to that?
No. I see, yes, of course, I think for Malaysian, even though we can do progressive, this is also, we also need to have a lot of credential. Yeah, that's why when we come together to decide to do on development, you see, of course, we all know in Malaysia there are a lot of, because of this progressive billing, there are a lot of failed projects, right?
That's right, abandoned projects.
That's right,
and so
exactly.
Forth, yeah.
That's why when we create this M101 brand, the two of us, you see, we refer this as a brand. We do not refer ourselves as a developer. Because it is very, if you could see recently all the developers, I think Malaysia as a developer, we already move on to the second phase, as in we believe in a brand more than just, I turn out everything. So of course, I think my partner, Dr. Chow, also, we see the progressive payment as one of the financial tactical advantage. But also, we also believe that it is with the brand, you can fully utilize this advantage. Because if nobody knows you and you never really deliver good products, I think ultimately nobody pick up.
That's right.
This also just jump on. This also bring us to. That's why you see all our products we actually apply to conquest. This other than the trust itself, we also believe in building qualities.
That's right.
This is where our strategy.
You mentioned conquest, and for that we're going to touch on that in greater detail in our next segment. Now we're going to take a quick commercial break and be back and to find out what else is transpiring in the Malaysian property market. Don't go away, we'll be back right after this. Welcome back to Movers and Shakers with me, Raj Arya. I'm here with Dato' Chua and Dato' Seth, the directors from M101 Sdn Bhd. Now, earlier we had a little bit of insights in terms of how you ended up in this industry. And now, in terms of the Malaysian property market, we have already entered the second quarter. And people have been saying that 2015 is going to be a very, very challenging year for the economy at large, but as well as the property market. Now, what are your thoughts?
I look at it generally because it's a temporary impact, which must caused by the GST. But sooner or later, people get used to it. And also again, when talk about property, it's talking about design, concept, and location. If your location is right, like recently, few prime location, is still got snapped up by a purchaser, and within few weeks, got sold out. So generally, of course, property now slightly expensive because of GST, because the construction cost will increase. But I think in the long run, people get used to it, and then I think property market is still robust. And with the infrastructure coming up from government's initiative and effort, for instance, MRT, I think the first phase should be ready by 2017. I foresee once this is ready, I think can increase the property market value.
Yeah, because connectivity is very, very crucial as well, especially those living in the outer Kuala Lumpur, for example. Now, you brought up a very important point, GST, which was implemented on April 1st. We are now into the second month already. There was a lot of speculation about how it will affect property prices prior to its implementation. Now that we are already in it, what is the ramifications? Has property prices increased, and if yes, by how much?
Well, generally, I look at the property market, they have slightly increased because the construction cost has got some impact. I think 3 to 5%. But for residential, I think still stagnant there, still not much increase. But I think commercial, yes, there is a slightly increase.
All right. Dr. Seth, I want to pose this question to you. Being a lawyer involved in quite a fair bit of conveyancing, dealing with banks, well, we all know that in recent times, Bank Negara has tightened up in terms of preventing an overheating property market, margin of financing, second-third property, the banning of dips, and so forth in the last 1-2 years. Has that really cooled the market, or is it still business as usual?
I would say, go without saying, it cooled down the markets, right? So I think now actually it's a very good act that Bank Negara coming at the correct time. I personally felt that it's good. But before that, everybody just shout any price you want. And the selling price and the land price, it just gone ridiculous. So I think it has actually cooled down the whole market. But actually, I personally believe Malaysian market is still strong. Because if you look at the whole Southeast Asia, averagely people are selling 5,000 USD per square feet in the city center. But we are still selling, how much? 2,000? That's the max is 2,005. Just coming back to just now some question. You see, I always tell people, especially with GST, this year is going to be a tough year. Because the thing I always quote is, perception is reality, reality is not reality. So a lot of people, they are very worried. They want to wait and see. So they say, let's wait, I'm very worried. So it's the whole market sentiment. But on the contrary, this year we are launching our biggest project, over $1 billion. We are going to do that. So that shows the confidence we have in the market. Of course, we are not going to do anytime soon, maybe on September. But I think Malaysia market, if you get the brand right, the location right, the pickup is still there. It's definitely there.
Right.
Correct.
Interesting. You're taking a contrarian approach. In fact, in times of adversity, there's in fact opportunity, right?
Yes.
This-
Turn disadvantage to advantage.
Then a disadvantage advantage.
You see, this one also, my own analysis is a lot of my friends, they rush into a property before GST. Actually, I say it's not true. After GST, you got a lot of good deals. Why? 10 developers sit here. We say, because of GST, let's increase price. Okay, all of them say, yes, let's increase price. Tomorrow, I will be the first one who don't increase. That's the competitiveness, right? So because of the market become more competitive, actually the consumer get even better bargain, because we have to outbid every other developers. And I felt that this is very healthy because it reduced out the inflation or the increment, the bubble of the market. But you look at it now, if you know the segment, anything less than 500,000 or affordable house is still selling very well. It's actually there's an increment. So I felt that this GST is a good restructuring for our developers. But in long run, it's actually helped us a lot, because now you don't get more NPL, you get lesser NPL.
That's right.
Definitely. And I would really like to sell to people who can really afford, because I don't want halfway through they cannot pay the installment, and our properties, 10 out of my 8 projects have to go for foreclosures. This is not what we want to look at it.
That's right.
Yep.
You brought up a very good point just now, NPLs. As we all know now that the market in the past has been affected negatively by speculators, flipping properties for quick profit and all that. So now, given the situation where Bank Negara has tightened up, the industry has cooled down as well, isn't there a mismatch between demand and supply? That supply has outweighed demand, notwithstanding the fact landed property, but more so in terms of condominiums, for example, especially the high-end ones. Your thoughts?
I personally believe KL City Centre high-end condo doesn't work. This is where later maybe we could discuss why we put our product at where we want to position it. Because it's true that Malaysia, I felt that Malaysia, if you go for high-end condos, it's all about expat, and we do not have that many expat. So basically, you are selling the purchaser a dream, which we don't believe, because we know how many expat are there. So, but of course, I think now most of the developers, not only us, but a lot of them, they bring in a lot of international brand. Malaysia City Centre enjoyed a few of the first in Asia international brand. If I don't mention names, but if you know, we have 3 to 4 recently. Big international brand, they set up their first hotel here, they first set up their first residence. I think it's a very good progress step. Instead of just selling you the dream of, you got 1,000 square feet, I'm selling it 2,005. I think most of us now actually bring in brands.
That's right.
And this actually leveraged us into an international platform.
That's right. Dr. Chua, anything to add in terms of
I look at it generally, new launching still selling well. I think not much affected. It's the subsale market that's slow at this moment in time. So long your location is right and you have a good concept and design, and then there's some new packages, I think you still can sell properties in Malaysia, especially Klang Valley. And Klang Valley won't go wrong because it is a international zone area.
That's right.
You can if you can't sell to local, you can still sell to foreigners. Because our pricing in Southeast Asia, not only Southeast Asia, the whole Asia, we are the cheapest in Asia compared to Singapore, Taiwan, China, Australia.
More so in recent times because of the depreciation of the ringgit as well. So from a foreign perspective, it's even more valuable in that sense.
Yes, you're right.
I think the most important part also, actually we have freehold lands up for grabs.
Right.
You see, like, Indonesia, you have only 30 years. After that, you either sell back to Indonesia,
that's very short,
or you give it back. Yeah.
That's right.
And Thailand, you cannot own landed properties. Malaysia, we can. So I think, and together with our MM2H program, I think in terms of international market, we have this kind of exposure and this kind of advantage to compete as a regional player.
Correct.
That's right.
Like Australia, if you're not PR, non-PR, you cannot buy landed property.
That's right.
So that's why Malaysia has got a lot of advantages in terms of property markets because we are freehold.
That's right.
China, you have 70 years and 60 years.
That's right. So there are a lot of benefits, not just for foreign investors, but also for local
and we
ones
also,
as well.
our country, our property location, mostly, I think 100% is disaster free. earthquake-free.
Yeah.
Correct.
Compared to our neighboring countries,
Yeah.
we are actually in quite a fortuitous
Yes,
position here in
Correct.
that sense. That the worst, I guess, would be floods, which flash floods, I guess.
Correct.
Right.
Earthquake.
Oh yes, now that's happening as well. Now let's take our focus very quickly down south. Johor, Iskandar region, big, massive development projects with Chinese developers having 1,000 unit developments and so forth. So they're flooding the market. On the positive side, it becomes very affordable because you have quite a fair bit of supply there. They make it very, very attractive. But on the flip side of it, what about projects? Will there be a severe mismatch between demand and supply, especially for developers in that region?
I don't want you to post it. Anyway, no. Anyway, I think as far as Johor is concerned, I think now it's very good that a lot of big investors come in. Actually, the developer themselves, I think the big China developer give a lot of confidence to international market. I think it's actually a ripple effect. It's not just like in Johor and KL. It's just now more people, because the China big developer come into Johor, they go back, they talk about Malaysia. They won't just talk about Johor. So overall, I think the whole Malaysian market benefit from the
exposure.
AMP, the exposure. Yeah. So we go there, they say, I know Malaysia.
Right.
But I think to comment on the whether it's oversupply, I think ultimately it's up to the developer. I am sure when they come in,
you leave it to the market forces, right?
Yes, I believe if they invest in billions, they would have their own strategy of how they want to sell it. But I think overall this is positive to Malaysia development because it exposes to a lot of different regions where people never heard of us. In China now we do a lot of tour ourselves.
That's right.
We do our talks, and now they all know us. They all know Iskandar.
Right.
Yeah, it's a good thing. Yeah.
Fantastic. Okay, hold that thought. We are now taking our final commercial break of the evening, but when we come back, we're going to go to the more interesting bits because we're going to find out more about M101 as well as their unique selling point, which is differentiating them from the conventional developers you see out there right here in Malaysia. Stay tuned on Movers and Shakers. And you're back with me, Raj Arya, on Movers and Shakers, as we're now getting to the more interesting big. Dato' Chua, can you just share with us very quickly, how did M101 start?
Oh, the M we stand for, M101 stand for our longitude of our East Meridian in Kuala Lumpur.
Right.
So how we start is, I bumped into my partner, and all this while I was in residential project in development,
right,
property development. And then there's one Friday, we sat down together, we talking around about what's the next move. I want to do bigger projects, yeah, and more vibrant. So then we came out to a conclusion, we do commercial projects, whereby all in the prime area, prime location,
right,
in city area Kuala Lumpur. And this must be with tourist attraction area, right, tourist focus area, as well as with mature infrastructure, MRT associated locations. And also it must be close to public transport area. And that's why we have our mission to have 10 blocks of buildings within these 3 years, right, to complete. And our recipe of our development, usually we have 3 in 1. We have retail, we have SOFO, and we have our hotel. And then we tend to do quite a number of blocks of hotel in KL City area.
That's right, mixed development basically. Yeah. But given the fact that the areas you're targeting in are actually matured areas already with everything quite established, can you find sufficient areas or land banks in terms of
developing? You look at our developments is, we usually go for smaller plot of land, right, so we call it boutique developer. We go for 10 to 30,000 square feet of land, and mostly is in KL City area. Right. It could be an old shop house, we buy over and we redo it.
That's right.
Or it could be about 1 acre of piece land size, and we also can do it. And the reason why you go for this kind of smaller piece of land, because in KL area under the Greater Kuala Lumpur Master Plan, they do allow higher plot ratio. So if I do on a small piece of land and I do very high, which with a higher plot ratio, I can save a lot of costs in terms of infrastructure, in terms of authority contribution, in terms of what I call it, the low cost contribution, medium cost contribution. If you go for a big township, like suburb area, they say your land is 100 acres. From rule of thumb, you only can build 45% net area. The rest of the area is surrendered for public utilities, like road and drainage.
That's right.
And especially suburb area now, they impose road, the width must be 50 feet above, and then drainage, and then landscaping, and then you have some public utilities like TMB substation.
Low cost housing as well, because it has to be mixed.
So end of the day, you have more time to spend on a suburb township project because you tackle so many authority requirements, external technical requirements. Whereas we focus in KL City area, we buy a smaller piece of land, we only deal with DBKL.
Right. You're not subject to all these constraints and restrictions.
Correct. And also, we don't have to fork out too much initial outlay because a bigger piece of land, you need to pay a higher premium, land conversion premium, and then to buy the land because the land is huge, you see. And then you have to pay a lot of contribution to authorities.
That's right.
So that's why we focus in KL City area, whereby it's an international zone. And then if one day, if purchasers from local take-up rate is low, I still can market to overseas. Like our trend of our existing project, mostly, I think quite a number of percentage from foreign buyers.
Right. So it makes sense. Dr. Seth, in terms of all your previous dealings with banks, coming back to that question as well, M101 being very, very new, how do you get the financing to start off? As we know, it is very capital intensive, and being a new company, new kid on the block as well.
Yep. So basically, I think just now, just to elaborate on what my partner say, you see how we create this tactical advantage. First, we are talking about 3 years. We are going, actually, M101, this particular brand, we are going to create 4 billion. Our whole direction is 10 projects, 1 directions. So basically, if you round up to here, around 4 acres. If I am a bigger PLC developer, I buy a 4 acre or 1 piece of land. I build over 5 years minimum spend 5 years. But now instead of 4 acres on 1 location, we pick up small piece in total of 4 acres.
Collectively,
Correct. And this is also our tactical advantage. So when I buy the first block, when you talk about smaller piece, you're talking about lower density. Every block of my buildings is only 100 to 150. For me, low density means I can sell faster. For the investor or the purchaser, that means the higher appreciation. Because if compared with 1,000 units, the competition is there. So with lower density, I can sell faster. You see, for a 4 acres of land, 4 billion, I need to sell 2 billion before I can start work. But when I chop into 10 projects, averagely is 150, 200 million. I just need to sell 100 million. And then we can start working. So my capital outlay is, for example, a 10,000 square feet, start with a 50 million projects. I can do 140 million. That's our first project. I only need 50 million. I got 70% loan. 80% loan, we fork out a few million, and our turnover time is superly fast. We sell 6 months, we finish, and we start off work. We start constructing, then I move to my phase 2, which is another 20,000 square feet. It's just
repeat the process again.
Yes, but this become low risk for us. Capital, because if I sell the third blocks, it couldn't move. First 2 blocks already moved.
That's right.
I just start at the third block. But if you look at the conventional of investment, you buy 4 acres of land, you can't.
You're
move.
Committed to the whole,
it's
the whole project.
The whole infrastructure.
That's right.
That's where you look at it, and ultimately we have low density, and we spread across the region. So the same purchaser, you could see now there are a lot of bulk purchasers. They want 3 units to 4 units. We tell them, don't. Every block you buy 1 unit. So, but it's still under our brand. That's why when we create M101 brand, basically this is like Kuala Lumpur city center. So across the board, and most importantly, we keep almost half of the building as a hotel. So we are not those people, we are a bit of hybrid. We want to build hotel, that's why we sell. We don't want to sell, that's why we build hotel. So for a 300 million projects, we keep half. So in terms of our exit plan, 3 years down the road, we believe we will be one of the biggest hotel operator in town. We own more than 2,000 rooms and 1 billion worth of asset.
Interesting.
That's where also bring us to, that's why we are so focused on our quality. Like for our first block, Tang Wang Yi, we sold off. Only then we apply for conquest. A lot of people, when they apply for conquest, is for marketing purposes.
That's right.
But if you could see, we sold off only 1 year later, we apply conquest because we keep half of the building.
Can you explain what is conquest?
Actually, it's a Singapore auto report. In all Singapore, all the HDB flat, you have to score 72 to 75
The
point.
minimum, right.
Minimum.
Right.
It's a point system.
Yep.
So basically, there's nothing. They just, after finish, they come in, they give you scoring, they post on this government webpage.
That's right.
So basically, this is a commitment. I don't know how much I will score. I will transfer this responsibility to my contractor. You make sure you score.
right.
We try to score 80. That's our target.
I noticed that there are two areas here in terms of diversifying in terms of your various locations and also mitigating your risk because you're doing one small project by one small project. So you can see how the market situation is like before you take your next, you're making your next move, right?
Correct.
Now you have talked quite a fair bit about the developments that's going to be taking place, the 10 projects, for example. Can you share with us what are the projects which you have have recently completed?
I think for our separate projects, we have a few others, but as long as under this particular brand, we start 2012.
Right.
Both first two phase already, I think by July it will finish until the basement.
Right.
But we haven't finished it. But for those two, we already completed.
That's fully sold already, right?
Fully sold.
That's
fully
right.
sold, yes.
It's just a matter of completion.
Yes, yes.
Right. Now we're almost running out of time. Moving forward, M101, what is your ultimate goal and strategy perhaps in 5 years' time? Where do you like to see the company?
Well, in 5 years' time, we have a lot of hotel rooms, a lot of assets we are going to keep. We're going to do retail as F&B in our own buildings. And of course, our ultimate aim is to get listed. We go for this thing. And also, it's part of this thing exercise, we also want to go for diversification of business.
That's right.
For instance, we are looking into natural resources. We're also looking into asset management.
That's right.
We're also looking into hotel management and maybe in finance sector as well. So these are our few key diversification.
Different revenue streams, yeah.
Yes, correct. To consolidate our group business.
Right. Dato' Seth, anything to add?
Yep. So basically for our diversification, if you could see, it's a vertical diversification, not horizontal. And most important thing, we will see 5 years down the road, we are duplicating M101 into M176, M165. That means in the South Park, we are focusing on Southeast Asia region. We are on the move towards there. And I think hopefully coming up after we launch our flagship projects, we are able to launch ourselves into regional area. I think that's, as far as 5 years is concerned, we want to go on to regional and create this brand successful model all over Southeast Asia.
Right, fantastic. Dato' Seth, Dato' Chua, thank you very much for your time today. And there you have it, the insights of property development in Malaysia. Something unique, something very, very different in terms of the strategy which this company is undertaking. Well, something to consider. Do check them out. With that, that concludes this edition of Movers and Shakers. Do continue to follow us next week, same place, same time. My name is Raj Arya. Have a great evening.